Just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only.
Morning, everyone. So after some quiet days, very, very low volume Christmas-like days into those all-time highs recently, we saw one of the most active sessions on Friday. A lot of pro desks reporting, Goldman, a few other desks saying that it was one of the craziest days they've seen in a long time. Big hedge fund selling into a lot of the areas that have done okay lately, financial, some discretionary technology, of course. Been a little bit of a mixed bag on the mag side, but a lot of things going on under the hood that have done well. And then a rotation to some things like healthcare. We'll talk about some of those areas in a moment. Of course, not United Health. That took a massive hit. That killed the Dow. So we had a little something that we're hearing about, which is potentially this Microsoft CapEx scare. We'll talk about that in a moment. So a lot of momentum getting hit. Carvana, Palantir, HIMS, all the way down to SoFi and Hood, Reddit, some names that I really, really like. So I'm getting a little bit excited about positioning in some of those names, been doing some cash secured put in some of those names. I'm looking for high levels of IV in order to perhaps spread that out, because I always like to have that bit of long gamma as well. And when you do kind of a bull vertical, bull put vertical, you get that nice little bit of extra long gamma. If markets are indeed going to continue to be volatile, which I think could happen, we could get a little bit of play in there, right? So when things are quieter, you want to be positioned in sort of the theta trade. When things get a little bit more active, theta is okay because you're being opportunistic about higher option prices, but it's always nice to have a piece somewhere in your portfolio. It might be in the strategy itself, but in other areas of your portfolio where you're playing that long gamma as well, because that's where you're going to start to really play that leverage as realized volatility comes back. So momentum getting really, really hit. OPEX, big OPEX last week, 2.7 trillion in notional options exposure expiring. So that's about half of all dealer long gamma. So I've been talking a bit about, we've had a lot of long gamma above that 60-35, 60-50 level. We've lost a lot of that. Let's see how much of that gets replenished into kind of the 16, 17, 18 VIX that we're suddenly seeing. But you could see really a lot of zero DTE being a big part of the equation these days. It kind of muddies some of the data, because so much hedging, so much activity is concentrated in zero DTE that I think it almost messes with some of the traditional sort of skew measures and things like that. So we can see the calls and puts that have been disappearing on Friday. So we kind of have this situation where stocks can have this ability to move around, move about the cabin a little bit more this week. So it's going to be interesting. We're seeing futures up quite nicely this morning. Let's see if this holds. I think it's something that needs to hold, because if we get below 6,000, I get a little bit worried that we're going to have a problem. So number one, Elon's xAI unveiled its latest AI model, Grok 3. So saying it outperforms DeepSeek, OpenAI. So the gloves are off. This is an AI arms race. Everybody's in on it. China, the US, everyone's going to join in. They use 200,000 GPUs to run the model. I don't know. These numbers kind of boggle my mind. Is that really necessary? Not my area. So obviously it is necessary because they're doing it, but it's just kind of mind-boggling how things are kind of how much money is being spent in that area. So big money there. Yet we hear this morning that we've got some problems potentially. TD Cowen coming out and raising a bit of a red flag here, saying their channel checks are indicating that maybe Microsoft is canceling some leases out there as it pertains to some of these data center leases that they have. And that's being seen as potentially raising fears that there could be a problem with the sustainability of this big spend going on, and maybe overall overarching in artificial intelligence in general. So they put this out, and now they're saying that people are saying that maybe that was part of the reason that markets really kind of got going, right? Remember, when we talk about gamma, we'll talk about it in a moment, gamma doesn't really do anything on its own, but if you start to push things through certain levels, it takes that spark, and the spark can lead to an unraveling because of negative gamma potentially. So we'll see if this story has some legs, but already somebody coming out and saying, look, they're misunderstanding things. Microsoft saying, look, there's no change to their data center strategy. The way that they work their leases has been misinterpreted a little bit. So everything is completely fine. Big misinterpretation. So that's going to be a little bit, maybe that's supporting markets again this morning. Of course, Nvidia, we've got this week coming out. It's one of the big reports. We've got some data coming out, but Nvidia being one of the big things going on. We can see it sort of pulled back into this demand zone here. We bounced back, hit its head on this downtrend line quite perfectly and pulled back with the broader market on Friday. Let's see, we've got it up a little bit this morning. Let's see if we can recapture towards that line there. Still generally looking pretty good. This is not getting super bearish at all. So we'll see what happens in here. What we saw was, so on Thursday, we saw this vol trigger heavily tested. So as we get into the gamma talk, we can see that there was this big level, significant put positions where we had to work off, bouncing off this level a few times. Eventually, the market did recover, but Friday, the vol trigger was breached, and the rest is history. We just kept going down and down and down and down. So it was a difficult day, without a doubt. You can see here on this daily S&P, we can see we sort of had this terrible day here, breaking down through this support line here after hitting all-time highs, banging its head off that upward sloping trend line. We're coming down. We closed pretty much on that 50-day moving average. I'd say we need to hold. We can bounce a little bit, but we do have a little bit of work to do, right? So this is a chart where there's some damage done. And despite the fact that maybe this Microsoft stuff is kind of blowing over a little bit, we do have a chart, a market that is quite nervous, getting a little bit more nervous with the backdrop. I mean, I've been very, very bullish. I'm starting to get a little bit more tempered in my view of things, at least for the next few months. We see this labor situation deteriorating. We see the tariff situation. I think it's just a lot of news that's starting to weigh heavily on markets, right? We have tariffs, they're inflationary. We have consumer sentiment quite poor suddenly. That's a growth scare type thing. So there's just a lot of stuff going on. Pulling back on government spending to any sort of significant extent is going to be a drag on employment, a drag on sentiment, really, and a drag on the economy as well. So there's just, a little bit deflationary too. So that's a positive, I guess, if you have to look for a positive there. But there's definitely some difficulties that this market is having to deal with right now, and it quite could be that the Trump administration is really kind of starting to break some things early so that things improve a little bit later. But the markets are going to have to deal with that. That's going to come with the potential erosion of these incredibly high profit margins that we've seen over the last few years. Maybe there's a little bit of room for margins to kind of compress a little bit if things aren't perfect out there anymore, priced to perfection. And that's just going to make things tough. I'm not seeing any kind of severe market crash, but if we can kind of get through here, if we don't start to repair things a little bit, there's no reason we can't get down to sort of the low 5900s again. And then after that, really, there's this long trend line that could get us down to about 5800. So really, these are the spots here that we've got to look out for. There's no question we're still in a very, very strong uptrend. You look at the monthly. I know this is kind of looking out a little bit. We really could drop 600, 700, 800 points and still be in a very solid uptrend from a monthly perspective. So, whatever you want to call this, is it healthy? Is it not? It could entail a little bit of pain, but overall the picture is pretty good, we have to say. But Walmart, another kind of bogey here. Walmart talking about a slowdown a little bit, and that is one heck of a drop. $10 move down on a stock like that is pretty incredible. I mean, it certainly is a little bit more volatile than it used to be, but that's a big pullback. That could lead to a bit of a growth concern as well. So, we've got some things happening this week. In a few days, we've got GDP. That's going to be important. We've got Nvidia, of course, on Wednesday after the market close. Very, very important. Not as important as it used to be, but very, very important from the AI perspective and the CapEx spend perspective. And then we've got some pricing data coming in on Friday. So lots of important stuff to look at. But really, after Friday, which was really kind of a big shellacking across the board, except in some defensive areas like consumer staples, drugs, utilities, we saw some bounce in there. That's kind of where we're at right now. We need to see some charts get a little bit repaired here. Volatility has jumped up significantly. It was extremely low in sort of the middle part of last week, and we've jumped up to the 75th percentile. So we do have higher option pricing. You can look at that from two perspectives, which is, okay, now we've got a little bit of premium to sell, because I've been talking about how, listen, you got to be careful. I've been talking about in the community saying, listen, option premiums are really, really thin. You got to be very careful here because there's not much meat left on the bone, and one big move could really hurt you. That's exactly what happened. So the good news is the market's come down a little bit. We've seen a jump up across the term structure in options. Now we've got a little bit more premium to harvest in there. That starts to make things look a little bit more interesting, again, in names that have also sold off. So you see how a couple things start moving in your direction. You get a little bit of a sell-off in stocks that you like, volatility popping up. That's much more of a green light situation than really, really low levels of volatility, low option pricing into stocks that are kind of hitting near all-time highs. That's just not conducive to anything interesting. In those kind of situations, I'd rather just kind of own the stock, maybe some in the money calls, maybe some very safe type things, maybe some of my turbo trades. But in terms of just pure premium harvesting, that's not a green light special. Now we're getting back into a situation where there's a little bit more to capture there. So good luck this week, and I'll see you guys in the next video.